And on to some more news and updates then. Earnings action ensues on Wall Street on the back of Alphabet and Microsoft results. Both companies delivered a beat on their top and bottom lines. Alphabet reported its fastest quarter for revenue growth since early 2022, performance largely driven by YouTube. Meanwhile, Microsoft as well outdid analyst estimates in their fiscal second quarter earnings. The company called for fiscal third quarter revenue between $60 billion and $61 billion. Earnings beat fails to woo investors as both stocks extended losses in after-hours trade.
Well, let's keep it with tech then, and the world's largest sovereign wealth fund from Norway has recorded a record profit worth whopping $213 billion in 2023. The figures, largely aided by the rally in tech stocks, and the government pension fund Global marked its highest return in kroner ever, with the fund's return on investment last year coming in at 16.1% for the year. That was 18 bips lower than the return on fund's benchmark index.
And global coffee chain Starbucks reported an otherwise weak set of earnings for fiscal first quarter. Revenue for the quarter came in at $9.43 billion, below the expected $9.62 billion. CEO Lakshman Narasimhan said the chain faced headwinds, including a US boycott and a more cautious Chinese consumer. Stock extended gains worth over 2% in after-hours trade.
Well, in global payments giant PayPal announced that it will be laying off 9% of its workforce, amounting to almost 2,500 jobs. The cuts will affect both existing roles and job listings that the company had planned to hire for and will take place over the course of the year. Now, affected employees will be notified by the end of the week.
And the International Monetary Fund sketches a brighter view for global macros. The lending agency has upgraded its outlook, envisioning resilient growth led by US and easing inflation. It now expects the global economy to grow 3.1% this year, unchanged from 2023, but better than the 2.9% it had predicted for 2024 in its previous estimate in October. Meanwhile, it has raised its 2024-25 GDP growth forecast for India by 20 basis points to 6.5%, although it continues to trail expectations of Indian authorities. Similarly, the fund has also raised its growth forecast for 2025-26 by 20 basis points to 6.5%.